Welcome back. You're watching FinWeek Money Matters. Now, Black South African investors have some unique opportunities. That's to buy shares in blue chip listed companies at a discount to ordinary shares. However, complicated structures, high levels of debt and limited opportunities to trade the shares have meant that many have steered clear of BE shares. So we take a look at what opportunities are out there. In studio with me, Craig Gradidge, financial advisor at Gradidge-Mahura Investments, and Anthony Wilmot from Singular Systems. Anthony, I'll throw straight to you. Just tell us, what are the options right now when we're talking about listed BE shares?
I'm only aware of one specific listed BE share that is on the JSE's BE board, and that's the Sasol and Zalo share, which trades under the counter code of SOL BE1, and that is available on the JSE. And the requirements in terms of maintaining your BE-ness is done through stockbrokers. So they enforce the rules that only black investors can buy those shares.
And all others OTC traded?
At the moment, all the others are OTC traded, the publicly traded ones. There are quite a few that are still not traded. So they're still in a locked up period where the investors bought the shares, but they have not yet been traded.
Maybe just give us some insight into, which has volume in these shares picked up, either on the listed or the OTC market, just in terms of, is there awareness of the opportunities to actually trade these shares? Because I was under the impression that
a lot of these people were interested in them, but then the sort of debt came through, and people weren't overly interested in actually trading the BE shares. Has that sentiment toward them changed?
You're absolutely right, and that was probably in the early days of the decisions of what to do. Sasol was the very first one to go into the JSE's BE board, and it wasn't very well traded. And probably the reason for that was not the function to do anything with the JSE. The fact that you had 40 different stockbrokers assisting these people to sell the shares, and most of these shareholders had never owned shares before and had no concept of how to deal with stockbrokers. We saw the opportunity as our company to go to the next series of people that were going to bring these shares to the market and say to them, listen chaps, potentially the way to address this problem of lack of liquidity is to make it easier. So essentially what we did for them is we wrote software to provide the trading platforms and manage the whole scheme end to end on their behalf. So one needs to be very careful as to what is happening here. These are effectively OTC shares that are traded. It's not an exchange. It's one company's shares that are traded, and those shares are traded between its shareholders. So that's really what's happening. We're acting as an agent on behalf of these companies to assist them. But the unique offering that makes it different to what happens on a public exchange, because these shares are restricted shares, they can be traded only by certain individuals. And in this case, these are historically disadvantaged South Africans, and they can buy these shares by literally phoning our call center. So we've smoothed the process to make it easy for them. And so to answer your question, the volumes have been quite significant. Probably Patuminati, which is the multi-choice one, has been the best one. It's traded since going live in the region in total of over R1 billion of the shares have traded. So it's very public, and it trades well, and at the moment it's probably doing about R1 million a day. So if you're a small investor, it's very easy to sell your shares pretty much the day that you want to, and if you want to buy them, you can buy them. So it's well traded.
Craig, tell us some of the other OTC traded shares that are out there right now, just to give us an idea of what the universe we're looking at today is right now.
Yeah, so the universe would be Patuminati, which, as Anthony mentioned, one of the more popular ones. Tembeka Capital, Sasol and Zalo, Umhlaba, Hlumisa.
African Bank.
And Umhlaba and Hlumisa are both African Bank deals. So when African Bank bought Ellerines, they had to do a second deal to keep their empowerment credential, or on the ownership side. So they did Hlumisa after that. So those are the shares that you're looking at. And they all trade on the over-the-counter platform, except for Sasol BE1, the black ordinary shares.
Yeah, Craig, just listening to the volumes, I was actually genuinely surprised that they were as high as that. I've always had the perception that while people were aware that these opportunities were there, actual trade and even awareness of it was still relatively low in terms of penetration. And we don't have a great stockbroker retail investor culture in South Africa. So to hear that kind of volume going through, has it materially changed in the last couple of years in terms of awareness that these shares are out there?
Yes, our business started out when the catalyst for the start of our company was me reading the results of the MTN Asonge deal. And my business partner walked past at that point and he said, he had read the article. He said, you see that 85,000 investors on what was an extremely attractive deal. And the thing that got us thinking was, when you have such a quality business on such fantastic terms, the numbers should be much bigger. So clearly there was a problem, 85,000 investors. I think what has happened over the years is that people have started to understand these deals more and more. So as deals have come on and you've seen the price action and people have been reading it in the press, confidence levels have been increasing. And then I suppose it's also been supported with a recovery in share prices since 2009.
Yeah, Anthony, I mean, one thing I noticed, I mean, specifically around African Bank, and I know that they've, I don't want to get into individuals here, but it has been interesting to follow directors' dealings there. We've actually seen the directors not trading the listed African Bank equity, but actually the BEE shares in it. It's quite nice to see those kind of almost landmark or executives being able to trade their shares. I mean, how important is it to have awareness of those deals that are out there at the moment?
The awareness of those deals is really controlled by African Bank themselves. Because this is an OTC platform, there are no requirements in terms of what information must be made available to investors. It's what ABLE wants to do. So you're absolutely right. Interestingly enough, most of those things that I've seen have been on the SENS announcements on the JSE side. But whether they've publicly put on their website, ABLE's website of course, that these deals have happened, I'm not entirely
Why
sure.
would you think that they're going for the BE shares as opposed to their own share, or is that
because it's
an
quite
obvious question?
it's a big discount to the price of the BE share itself, and ABLE, unlike Putuma, and well, Putuma is actually the exception. ABLE unbundles, so the shares, it has a lifespan. It'll end in 2015, and then all the Enclava and Clemisa shareholders will get ABLE shares, and then they will be able to sell them on the open market.
So that's a key consideration. What happens at the end of the empowerment period? How long is the empowerment period? How is it structured? Of course, those would be questions you'd have to ask if you're looking to invest.
Yeah, so what you're looking for is some kind of liquidity event where either you get the underlying holding and you can then trade that with ordinary shareholders, or perhaps traders opened up to anybody, you know, not just previously disadvantaged individuals, which would then make the market bigger and increase liquidity, and price discovery is a bit better under those conditions. So the terms and conditions around each deal will have an impact on the valuation that you would apply. But I mean, from what we're seeing, some of the discounts are ridiculous.
Give us an idea.
So, for example, Tembeka, after CGT, is worth about 112 Rand a share. It's trading at 70. MTN, no, sorry, not MTN. Putumanati, we estimated over 150 Rand a share. It's trading between 75 and 80. So you got heavily discounted shares, and if you're a patient shareholder, the discount becomes a big source of return. You know, so at some point in the future, when that discount unwinds, a 50% discount equals to 100% return.
Yeah, I mean, and Tembeka is interesting. I mean, you know, as a white guy, I can't get into it, but I do find, I've done the sums a couple of times myself, and I do find it very, very interesting. You talk about a liquidity event of it coming, and I guess one option would be for it to come to the JSE. The counter argument to that, and I mean, we've seen it with a few of the OTC shares, is there's always this talk that they will arrive on the JSE and they'll suddenly re-rate. What happens if it sits off the exchange? You know, do you get a genuine sense that Tembeka will come to the JSE in a couple of years' time?
No, I don't get that sense. You know, when you read the financials, they don't give any clues to that effect. It's a possibility. I mean, they're part of the PSG, own a big part of Tembeka Capital. I think it's 49% of Tembeka Capital. And the rest of PSG's portfolio, well, a big part of it is listed. Caro, Capitec. So it wouldn't be out of the ordinary for them to have another listed subsidiary. But that's an option. They could open it up to everybody, or they could unbundle some of the listed holdings within Tembeka. So that could be seen as a liquidity event. So they've got Caro Holdings, which is listed on the JSE, or Capitec. So those could be the kind of liquidity events that you could see maybe 3-4 years down the line.
Do these BE shares pay dividends?
Yes, more and more.
Yeah.
Depends how much debt they've got. MultiChoice has done really well. When it was done 7 years ago, the shareholders paid 10 Rand a share to get them. It was 40 Rands worth of debt. The debt is now sitting at about 8 Rand, and the share price has gone from 10 Rand to around about 70. So they've done really, really well. It once again depends on how good the underlying dividend flow from the company the assets that the Black Empowerment Company owns, how much dividends is flowing in. And MultiChoice have paid good dividends.
Yeah, just to add on that, on Putumanati you pay 10 Rand a share, you've got 6 Rand 30 back in dividends since that deal was done.
And then financial results this year, the dividend has gone from 1 Rand 18 a share to 2 Rand 66. So the dividend's gone up by more than 100-fold. I mean, 100%.
Yeah.
I mean, one of my questions, I just want to come back to the Tembeka thing, and I'm not trying to put you on the spot here, but the concern is that these vehicles sit off exchange, they don't re-rate, they attract capital that kind of just flows backward and forward, but they never get, the shareholders never get the value unlocked. How do you reassure somebody, you talk about it as a potential investment to be considered in the mag this week, how do you reassure investors that value will ultimately be unlocked?
I don't know if you can. I think only management can. And if you read some of the past financial statements, they are well aware of the need for shareholder value to unlock at some point. And management are big shareholders in their personal capacities. So I think the thing is, if you look at that portfolio, it's a quality portfolio, quality assets, quite diverse. And that's what the discount is there for.
Yep.
The discount compensates you for all this uncertainty. And I think, I can't give anybody a guarantee, but I'm quite happy to hold it, because in the event that a liquidity event happens, I'm rewarded for taking on that risk.
Or, for other companies where you got the BE shares at the end of the empowerment deal becoming ordinary shares, you would assume obviously there would be a value unlock there if they are trading at a discount.
The only one I'm aware of, which is Putuma, which doesn't unlock, and the reason for that is part of their license condition. 20% of that company has to be owned by historically disadvantaged South Africans for them to keep their license to broadcast. So that's why there is no liquidity event on that one. The others have got it, which will eliminate the discount, because when the liquidity event happens and it converts, you are an ordinary shareholder, and then you can sell it on the JSE. The problem with that, of course, is that you've got to redo your BE, because the once empowered, always empowered concept currently doesn't exist in our country. So it does mean that the companies have to redo empowerment, which obviously for them is very costly. So it's going to be interesting to see long term what they do, whether the new schemes, if they do more of them, come out and say they're not going to unlock, that the discount, which Craig was referring to, is the fact that it's a restricted share. The more restrictions you have in a share, the more trades at a discount to its real value. And that's essentially why BE shares are at a discount.
Are there more deals coming to the market in the next 2 years? I mean, there's just MTN and Vodacom, if I remember correctly.
Those are existing deals that are literally just now going to become traded. I'm not aware of any new ones. The new BE legislation, I've been told, has been passed. I'm not entirely sure, but the codes have gone up significantly in terms of the requirements to comply. And what corporate South Africa does with that, I don't know. But certainly it used to be 7 elements of the scorecard, now there's only 5. And ownership is now, if you're a company of more than 10 million Rand turnover a year, you have to have an element of ownership. And if you don't, you get penalized in the scorecard.